Please, let's start with a brief intro about the Raisin. What is the company doing and which markets you are in?
Sure. Hi. So Raisin is, we are creating marketplaces or marketplace functionality for a very simple product, which is savings. What we do, we connect banks in the backend and give clients either direct access through our marketplace to currently 88 different providers in different countries, or we do it also through third parties. So we have also an API which third-party financial providers are using to give their customers actually a marketplace experience for the savings products. So that's our first vertical, but we're doing more than that because we're evolving the company into a provider which gives you best one-stop stop shop experience for both savings and investments, so that in our core market, Germany, we have also two further verticals. One is investment portfolios, which we do together with Vanguard. And the second one is we acquired a pension provider. So we do savings, investments, pensions, currently in a single market. The marketplace on the savings side, we do across Europe. We have 9 active markets, the main markets being Germany, the UK, Spain, Netherlands, France, Ireland, Austria, and so on. And we're launching in the US in the next year.
So yeah, actually you touched 2 interesting points. So first, why did you decide to start from Europe? What is so specific for this market, for this area?
So so I lived in Berlin, so that's very simple. That's why I started in Europe. I think for our product, there are several factors which influence it. So people ask me like how to choose the right market for a marketplace offering, and the best market is where you have a lot of providers. So Europe has 5,000 different banks, so that a lot of providers is good for marketplace business. Means that you can give to the consumer an offer which is much, much better than what he has currently, with a very high probability. The second market which we're launching is the US. US has 6,000 providers. So that's the more providers you have, the better. Is Georgia a good market for a marketplace for savings? I'm not so sure because there are only very few providers in the market. So that's first factor which we're looking at, how many providers are there, because it's a variable which indicates you how better an offer you will give to the customer than his current one.
Okay. And comparing these 2 markets, did you find any differences or specific characteristics for European market and US market?
So European market is not a homogeneous market, so it's very different country by country. Also, the technology we're using and integrating is partially different. And then, European Union is a common market in theory, but in practice, even how we show the product to the customers is very different. So, for example, in Germany, we are showing nominal interest rates. On the same table in France, we have show effective and nominal interest rates. In Spain, we're showing only effective interest rates, and also the product descriptions are different. So that we have to customize a lot according to the market. In US, the market is much, much more different than in Europe, because in Europe, we do not have an area which is called broker deposits. So already on the regulatory level, there is not a different treatment of our funding versus banks' direct funding. In the US, those 2 things are completely different things and completely different markets. So that our entry in the US will be a very different one than what we do in Europe. And also competitors are very different ones. So actually, we were the first ones worldwide to do this like combined marketplace offering for the deposit area. But by now in the US, almost every big startup company started a cash offering. So Wealthfront was the first one. Then Robinhood started recently, Credit Karma started recently, Betterment has a cash offering. So all of them have a copycat product of ours, so that our product needs to be in the US much, much better than what they copied from us by now.
And you mentioned you see banks as the clients of your company, right? But we also had this very new, interesting news recently that Raisin acquired a German bank. Please tell us a bit about this decision. What was the reason for it, and how did it help to your company?
So we work with banks in all markets in 3 different ways. So first is because we do not have license in the majority of the markets which we enter, we offer with the so-called sponsor bank or service bank, which gives us infrastructure. So it's mainly payments and KYC function we use from the bank, and then in some markets it's a license coverage. The second type of bank we're working with is someone who gets funding through us. So that of that type of banks, we have more than 80, 85 by now. And then there are some banks like Commerzbank, for example, or some savings banks or Santander who deliver us clients. So they give their clients access to our product. So this are 3 types of partnerships. In total, we work with around 120, 130 banks. And like we acquired one type of the bank, which is this sponsor or service bank, because it gives us infrastructure on the payment side and KYC side. And for us, it was a strategic decision because if you think about very long term, then we would need first is control about our full tech stack and full infrastructure. And before that, we controlled roughly 70, 80% of it, but not fully. So that what happens on the payment side was then outside of our control because we deliver actually a payment file and then the bank executes. But for example, whether the bank does instant payments or not, we cannot control because it's their technology decision and their investment. So that it was important for us to be in control of the full value chain. The second one is, as always as a fintech startup, you have some licensing issues because you want to do more than you are actually allowed by your license and you start to gather licenses. So in Europe, we by now have 9 or 10 different licenses in different countries. But a bank license allows you to do much more. And in Europe, it allows also to passport to 31 countries, so including EEA. So that's why the second reason was to have licensing cleared for the time being. And the third one is in the bank, we offer services to other startups as well. And this we can build out very fast because we understand as a startup what other startups need. So that this banking as a service, which we want to increase and enlarge a lot in the bank, that is also very simple for us to do.
So we touched this licensing and regulation topic. So please also tell us, we mentioned open banking standards and you are operating in Europe. What was something that helped you? How open banking was actually influential to your business? Was it more helpful? What did you see as the biggest advantages of being in the market where we have these different regulations? And what do you see as the challenges that we didn't have solved yet?
So, I think no one will help you except yourself. So regulation actually never helps. Even the best meant regulation never helps. So that we do not see it as something very relevant to us, but it's something very relevant to decision makers on the bank side. So they open up their thinking a bit because so all of them are highly paid strategists without practical experience. And they think a lot, and their thinking is, if we do not partner with those guys, at some point we will have to open up our data or partner more, so that actually the PSD2 regulation is not relevant to our product at all. So neither savings accounts nor even overnight accounts are part of PSD2 regulation because it's only transaction accounts. But because there are so many strategies in those banks, they say, but if it's transaction accounts now, it might be deposits tomorrow or the day after tomorrow. So let's see a way how we can actually earn money on those guys and on this product so that we are not forced later to do this, but are prepared and have a commercial model around this. So that in that sense, it helps, although it doesn't touch us directly. On the other side, we wanted to start a product which actually Jamal has already to integrate the current account so that you can automate your savings fully. So that you actually will calculate for you how much is your free budget every month, and then you can put it away on any of the accounts which we have in the background. And so actually PSD2 implementation has stopped that project because this is implemented so badly that it's got for the clients more complex to access accounts than before, because now every provider has 3-month limit access to the data. And you have two factors at the access of the account, and those are not harmonized, so that at every bank you would need a different factor actually. So if you connect accounts in the background, then you do not have a master password, but you have a master password, and the second is a device, MTAN, specific app or whatever, and this is not harmonized by banks. So that actually access to the accounts after the regulation got more complex than before. And I was at a meeting with banks and fintechs at the German finance ministry, and actually one of the guys was very funny because he really said what he thought. He said, "And you really thought we will give you access to our data?" Of course, it's not their data, it's clients' data, but this is like the way banks think, so that at the end, like the best meant regulation might not be implemented as it is because there are many participants in the ecosystem.
And you are also the member of board in Bank of Georgia, so you also know how local market works, how banks think here. What do you think, would the same regulation and would the same standard come to Georgia, and should we also go to that stage where we have open banking standard and banks are more open to actually partnering up with fintech companies?
Yeah, no, I think so. The good thing about this market is it's actually, for a small market, it's pretty developed. So the functionality customers get are really good and on par with the leading markets outside of Georgia. And also the banks are very, very fast in developing and implementing. So I know both TBC and Bank of Georgia from my past. So whatever TBC does, Bank of Georgia is probably prepared 1 month later to roll out the same feature, and whatever Bank of Georgia does, TBC has it 1 month later. So that the banks are very, very fast in iterating, which is good. So what I think is on such a small market, the good thing is you can involve the players much easier than on large markets. So that in Germany, for example, you have 2,000 banks. It's impossible to align with them regulation or even account standards or account access standards. So that whatever they do is on purpose or not on purpose, but not really aligned and rolled out nicely. So that I think here's an opportunity where the regulator can really sit down with 4 or 5 leading banks and talk with them, like what is the objective of that particular regulation and how to implement it jointly so that it becomes a better experience for the customer and not the worst one. So that's easy and good. I think also on the bank side, all of them are looking out for good ideas and for good teams. So they are open for business and open for partnership. And if they see an opportunity, that's a great opportunity for them. And they have units like yours, which are working on partnerships. I would say still, this is not an ideal market for a startup because you have very few large players who can flex the muscles. You have a very specific closed market, which is not transposable neither by language, nor by regulation, no by passporting rules, so no access to the outside world. So that if you are a startup, you might not be in the best environment to launch here.
But do you think this could work for the testing stage where you want to validate your idea? Sheil also mentioned, even though we are small, and you added on this, that we have few partners and it's easy to reach out to them. Does this mean that it's good for startups to actually test the idea here, find out the first mistakes, first feedback, and then go to other markets?
No, I think that's very good, and it's a very good approach. So I will give you an example on our side of the bank partnerships which worked and which didn't work. So what doesn't work, definitely, so I mentioned one of our partners is, for example, BBVA. We worked on that partnership for more than 2 years. I never said it publicly in a room, so please do not quote it, but complete failure on both sides. We over-invested resources. CEO of BBVA was personally involved, and we helped them write their first contract on Open API partnership. So did a big announcement on our side, big announcement on their side. We're on their website still the only Connect partner they have worldwide. So big effort and a lot of resources, like complete failure. So I think we have almost no business jointly. We have 2 partners, which are both startup partners. Both of them have licenses. It's N26 and it's Scalable Capital. And both partnerships are growing great. Why is it so? because they are more open-minded, faster, they're more digital, and they can implement things and iterate with us much faster than BBVA can do. Because for BBVA, our opportunity is a tiny one, so it's not even in the P&L, or they cannot even mention it. For Scalable, they can become quickly 10 or 20% of their business. So we are much more relevant for them than for much larger players. So that if you find a partner, and I think like all banks in Georgia are fast enough to iterate and to implement things, a partner who can really develop with you together a product, that's a very good testing ground, with having in mind that the ultimate rollout field will not be Georgia. Because I think it also allows banks in Georgia, if they know you're building jointly a business model where the ultimate consumers, be it banks or clients, will be outside of Georgia, it makes the product also less competitive for them. So that in their mindset, so Bank of Georgia would of course partner and invest if they know that same feature will not be 1 month later at TBC and 2 months later at Liberty and so on, but the same feature you're developing jointly to have it really rolled out, like, I don't know, in the region, across the world and so on, so that your ambition gets much to a higher level. I think with this type of thinking, this is a very good market because you have fast banks and also consumers who are open for new features and for testing and for endorsing fast. I think the last thing is I also know a couple of startups in Georgia, and some of them are trying exactly to do that. When you go to the outside countries, find the like-minded. So do not go to the largest bank or the incumbent number one in Eastern Europe, because those are typically also slow-moving things. But go to digital banks. Go to Tinkoff. Go to Airbank. Go to guys who are iterating fast as well, because they will have the same interest and the same incentive, same thinking as you have.
And their niche is the innovation and better UX that they suggest to clients, right? And they are more hungry for new solutions because they cannot live without this.
Sure. So I mean, the issues they're facing are also different than any. So what is an incumbent issue? So Deutsche Bank in Germany, I think, tries to change its core banking system since 14 years, and it has the same issue than 14 years ago. It's to change the core banking system. So it's a different issue than a startup bank would have, because they're not struggling with an outdated core banking issue, but they're struggling to get more users, to get user attention, to roll out features fast, so that what's like, I don't know, Revolut and N26 will be trying will be much faster, cleaner, and easier for you to set up. And they will be focused on it compared to whatever Erste Bank in Hungary having an old antiquated core banking system.
Okay. My next question will be very technical, but I'm sure this is one of the questions that those startups who are in fintech area have in mind. So you mentioned Revolut, N26, all these companies that, of course, you need to approach. What is your suggestion and advice in the ways of approaching them? I mean, technically, how to find them, where to find them, and how to approach them, how to pitch to them?
Oh yes, that's a very good question. So first thing is, like really funny anecdote. Actually, all of those people started their project outside of their home country. So Revolut, it's actually Nikolai, who is a Russian, who started in the UK, and the product is not available in Russia. And N26 are two Austrians who started in Germany as the first market. So they always went for a much larger and much bigger market than their home country, so that it might be a learning for Georgians to go out and try.
You did not start in Georgia, you started
I
in
didn't
Europe.
start in Georgia, I started also in Germany. My product also not available in Georgia. So that when you're in a small country, you have two choices. First is stay there and iterate and try, or second one, if you have the energy and balls and everything, then go out and try it in a much bigger market. So probably the success, if it comes, is much bigger than. So how to approach Revolut, N26, and all the others? I think there are two ways. One is to have a very good product yourself, and then they will come. So that's our approach. We have in all the markets where we are, we have the best savings product, and more or less those guys and others and incumbents come and say, how can we build? So if you have a very good product already, that's easy, because it attracts also partners itself. The second one is you do not have a good product, but you have an idea or a feature. That's a bit too early to approach them, because you need someone like less risky environment and less less dynamic environment, which is challenging for you, so that you need one partner whom you allow to co-invest, to learn as well. So like, I don't know, can be fintech partnership, can be a payment app, can be something different, who are more also on learning and early stage, or a much smaller bank. So our first experiences in the first 2-3 years were very small banks who like really needed some innovation, who really needed a learning and test ground. So once you have done through that and have a good product, I think the best way is to grab those guys. So to go to a conference, to stalk Valentin or Nikolai after the stage when he talks, and to try to get his attention and to show the product. Because at the end, those startup companies are really founder-led. So that it's still small enough so that they know like which features they're doing and what product are they doing, so that the decision whether it comes into the rollout or not is more or less driven by the founder. So get their attention.
Maybe we get them on next Startup Grind, so they are here and we can grab them in the hall during the coffee break. Okay, now let's move to more about your personal experience. So you worked for McKinsey as well, with Jamal, I guess, and you both decided to start your own companies. What was it that made you think about starting the startup?
Yeah. So for me, I think it was a bit different than for Jamal, because for me, so I spent, I think, more years, 10 years, so my cycle is bigger. And then it was based on the personal reflection, and I like really went through all the options. What should I do? And what I realized that after 10 years, you need a change, because purely financially, also I was a partner at McKinsey, so that the next stage was a senior partner. And to have a case where you have like next 10 years as a senior partner outweighed by a startup person is almost impossible, because you earn really a lot as a senior partner at McKinsey. So that I thought that if it's a good moment to leave, then it's now, because still this like big amount of money is yet not there, but it will be there in 2 years. So that if I want to change, it's better now when I do not have a even bigger financial incentive to stay. And then the other thing was, I thought I was back then 30 or 30. So I became partner when I was 30. So I was 31 when I started thinking about the next step. And then I thought, like, what is the thing which I will not be doing 10 years later as an option, or 5 years later? And the option which I would not be doing is go into like highest risk and start a company with nothing, so with no salary. So my salary went down tenfold, but I didn't have a family, so I didn't have all the factors which are limiting to you.
So you jumped to startup, right? You didn't do it part-time, right? Doing side business.
No, I didn't do it part-time. So what I did is, in the last 6 months of my McKinsey career, I of course used the salary and luxury of McKinsey, and like 20 or 30% of my time started to prepare the pitches, started to talk with potential investors. So my 2 co-founders are both from McKinsey, and they had the sabbatical year, both of them, and they're working more or less 100% on the project while I was still ramping up. But the switch was then, we had a decision moment in September where we said, okay, what are the 3 criteria we want to achieve to decide? And all of them were true. And then all of us quitted the same day.
Okay. Yeah, this is really a big decision. So in Georgia, we have so many people employed in big companies, and at the same time thinking about starting the company. Some of them do part-time, and some people don't believe in part-time startupper thing. So your point is that,
so you have to be all in.
Make a decision.
Yeah, right? So there is a saying in German saying, the wrong approach is, if you want to be washed but not get wet, because so if you're going under shower, you will be really wet, and it will be really, so you will be sweating and you will have 100% risk. So there is no like comfortable environment where you can get a startup hero but have no risk on your side. So that thing doesn't work.
And how did corporate experience help you in doing your own business? You mentioned you had co-founders from the same company, right? Were there any other very important things that you took with you?
Yeah, so some of the things helped, some of the things didn't help. So like the thing which didn't help is, I had at McKinsey many financial institutions as clients, And that didn't help at all. So none of them became our partner until now. So actually, my biggest client, which I had, Deutsche Bank, is built my copycat product and partnered with my competitor. So not even that it didn't help, but it's also really detrimental, because people who know you, they will decide against you, because they say, if I decide for you, it might be perceived as a friendship or bribery or whatever, or I know you and didn't do the full effort. So that if they know you, tendencies, they will decide against you or not involve at all. So that didn't help. What helped me very pragmatically, first thing which helped is when I was a student, I was doing all types of side jobs. One of them was I was headhunting people over phone. So that like stalking people over phone is something which I can do very, very well. And it helped a lot so all our first bank partners were acquired over phone with the same approach as a headhunter does, like calling some numbers, central phone numbers, trying to find the right guy, treasurer or CFO of a bank, and then persuade him on the phone to meet you for half an hour. So that I was good at, but it has nothing to do with McKinsey. It had to do with my student side job. So that you, of course, need some skills which you utilize at the beginning. There might be from the corporate environment, there might be not. The other thing which helped us is I understand quite well how bank employees or bank C-level employees think. So that if I have the chance to present the idea in front of a board member for half an hour, there is a high probability that it will click somehow. And it might not work in the next 6 months, but those guys might come back then in the next 2 years. So that McKinsey skill of having like top-down conversation, elevator pitch, a very concise presentation, to understand, like to put yourself in the other person's shoes, what is his motivation, how can you make him successful, because people do not partner with you because they think it's great that you will become a tech millionaire or billionaire. They partner with you because they think they will have a career advantage, they will be heroes themselves. They have a positive spillover on themselves personally. So that, and these are the reasons you need to show in the pitch deck, explain them. You need to make them shine, not yourself. So those things, of course, helped.
Yeah, and on the previous meetup on Startup Grind, you also mentioned you're looking for some interesting startups to help, right? Can you tell us a bit about your experience as an angel investor? What kind of companies you're looking at?
So I'm one of the proud angel investors into Bonify, of course. No, I think I invested into 20 companies or maybe 30. So I don't even count. I don't have an Excel spreadsheet even. So I have it in directories on my hard drive. Oh, it's not even in cloud. So, so that and this the system is very simple. And also, I think completely wrong. So by complete coincidence, the first guy who asked me to invest into his company was one of the founders of a very big listed company. By now, it's called Delivery Hero, and they do something like Glovo. So it's a food delivery service, and they're global by now. And I was one of the seed investors, so like initial seed investors, and he asked me, and I didn't want to invest because there were 3 companies like that already in Germany. They were number 4 starting. And then he really asked me career advice. Would you advise me to leave McKinsey or would you advise me to stay? And of course say, like, if it's your dream, leave now. And he says, okay, but if you believe in me, would you give me whatever, some money? And I asked him, what is the minimum you would expect? And this is the amount I've done. So I've invested 20,000. I think the return was 600 or 700,000. So it was a very, very good investment, but unfortunately a small one. And then the second turned out to be exactly the same case. A guy who was one of my best friends founded a startup also from a McKinsey guy. And also I've done a minimum ticket there. And that turned out to be also a very good investment. And then I thought, wow, I am so smart. I really can recognize the great founders. I'm just not putting enough money. And that was, of course, completely wrong. So the next 3 went bust by now. So that this collection of the things is a wild compilation of people whom I know personally, former McKinsey people who were introduced by other people, where my only confirmation was that the other person is also investing. So that after 30 startups, I started to ask myself whether this is the right approach. So I'm now NLP in one of my own investors. So Ribbit, I'm a investor into a fund because I think there is a reason why funds do their business, because they're more professional. They have Excel spreadsheets. They do performance discussions with these companies and so on. So that I switched a bit my approach from doing this small stuff myself to going to professionals doing this.
And there are many companies, even we were discussing this, there are some people posting in the event application, they want to meet you, get advice, because you have this huge experience, which is very limited. There are not so many people in Georgia with this huge experience, and there are so many startups who want to meet you and get advice. So my question is, first, how do they approach? I mean, what are the ways to getting to you and asking some advice, and what are the top things that they should consider before coming to you?
Okay. So yeah, so I'm here. So I was here yesterday as well. So I was, I'm open for talking. So you can approach me. That's not a problem at all. What are the things? So I think first thing is, so what are my learnings as well from the very, very early stage? And very early stage is the hardest stage you get. So we almost stopped the company 7 months down the road before the launch. We had investors jumping the ship. So we had investors who put a lot of money with us, and 2 of them have said, after 7 months, I want my money back. And like, how do you get your money back? It's not a fixed income investment, so there is no liquidity. So there is some liquidity, but it's like much less than before. No, I want my money back. So so like the first 12 months were the most difficult. And how did we survive? The first thing is what Jamal said is 100% true. You need to found with people whom you trust on a personal level, and where the trust goes into much deeper level than having a common commercial goal or whatever, like a client vision or like any other bullshit. So really having people whom you can rely on when it gets hard, it's really valuable. The second one is ideally you have worked with those people, because having friends co-found with you who are like friends and you're going out and having fun. So working is not fun. It's not always fun. So it requires dedication, it requires sweating, it requires long hours, so that if you know you can rely on people on critical situation, that's even more beneficial. The third, very minor detail, but very important one, we were 3 of us. I think 3 is always better than 2, because with 3 you have a majority, and with 3 you do not get into because some people get into fighting. If you are 2, you start to fight naturally at some point in time. There are 2 big egos clashing. If you're 3, it's a bit more political, because like you want to be liked by 2 other people, and you know that if you are the one starting a fight, you'll probably lose the fight. So that it's better to start with 3 than with 2. And the last thing is initial talent. So we tried to recruit initially into the company, like bright people and so on. It's impossible. You recruit actually someone whom you know, or someone who knows whom you know. So that the maximum networking radius is actually a second layer, and realize that from the beginning. So do not go for the best talent and so on, but really try to persuade your friends and family and ask them whether they know good people who could do ABC. And that worked. So our CTO, we found through one initial investor who was himself CTO at Intershop, at a Georgian company, at a large German company. And then he had someone on the product side who was really good. He recommended. So that be humble in the, like how much good talent you can attract at the beginning. Probably not at all. So unless they like you and they believe in you personally.
Okay. Thank you very much. I know you are super busy, and you spend very few time in Georgia, and we are really happy that we had a chance of having you here on the second time with your friend. So you are really helping the ecosystem to keep up and to start off. And yeah, thank you for sharing your very specific advices, and yeah, wish you success. Thank you very much.